All right, good morning, everybody. We're going to get started here in about 30 seconds. So go ahead and top off your coffee, get out some notes, do whatever you got to do. So see you in just a few seconds. All right. Well, good morning, everyone, and welcome to Trading Mentors. I was going to say first live webinar, but we had our first one last night, so technically it's going to be our second live webinar where we are very excited to discuss the top 3 mistakes that traders make. Now, we did not expect to sit there and book the bookings last night on the first webinar. We had an opening up for about 50 seats, and we actually exceeded that by about 353. So we actually had to expand the network on our GoToMeeting.com, get some more, or get some additional capacity. So I want to thank you guys for just showing the interest, and if there's things that we can do better, please definitely shoot us an email so that we can make those improvements. What we are, I think it's very important to go ahead and start with that. What do you think, John? As Trading Mentor is, we're trying to build a community where traders and ideas can come together. I think probably one of the biggest mistakes that we make, and this isn't obviously the top 3, this is just my personal opinion, is the biggest mistake I think that we do is when we make these mistakes, we don't often share these with other traders. We don't share that within the investment world. We had the tendency, and it's probably just human nature, we like to keep that to ourselves because either greed jumps in, or perhaps we just don't like the thought of sharing those ideas because we're trying to get the competitive edge. And I get that, I really do, to a certain point. But just think of how much stronger we could be if we work together, share these ideas, and move forward. I like to think the analogy of taking a little stick. The stick all by itself, when you sit there and bend it, it's going to be kind of frail. It could be a little strong, a little difficult to break, but when you put some additional sticks together, it gets a little harder to break. And eventually you get enough of those, and it's going to be unbreakable. Kind of like the thought of a phone book. Take a piece of paper, you're able to tear that in half, but you stack it up like a phone book. Who do you know that can literally tear a phone book? And so that's kind of the mentality, that's the idea of what Trading Mentor is going to be. And so what we want to encourage our listeners out there is, if you guys have some great ideas, best practices, things that you guys have done on your end, shoot that over to us because we want to take a look at that. And then we'd like to invite you as a guest onto the show and basically do like a verbal meeting out there to discuss about what you saw, what you've done, what you've learned from that, so that everybody else that's listening in can learn from that. So together we have about 20 plus years of trading, and like I said, we are basically here to share what we've learned, basically our mistakes, with you, so that in the future you guys don't make those same mistakes. We have a lot of new investors that are out there, people who are maybe interested in day trading, and even people who've been day trading for a long time. So a big, broad spectrum of investors that have to come together. And I think we can learn a little bit something from everybody. Especially for you new investors, be open-minded. Really listen to what, not just us, but a lot of people, the vets out there, what they're saying about things that they have learned. And the whole point of today's webinar is we're going to talk about the top 3 mistakes that we've made. Now, obviously, we have made a lot more mistakes, but these are probably the biggest 3 that's going to help you to minimize your losses, going to minimize and mitigate your risks. So let's go ahead and get started. So a little bit about myself. I'm not going to talk about Jim today, but we're going to talk about myself today because he's not doing the webinar. Sorry, buddy. But he's going to sit there and watch this, and then he's going to do one here, probably on candlesticks here in the near future. So when I trade, I like to do candlesticks. But my name is Nick, so obviously Nicholas Carroll you see up there on the slide, but I do go by Nick. And I got a master's in science from Creighton University, where I actually did their CFA program. We're a chartered financial analyst, where I got a master's in security analysis and portfolio management. They've changed that title a little bit, but that's a little bit about myself and banking and finance. So what's interesting about that is went from banking and finance, really kind of got my feet wet on that side of the house. And that's where I met a gentleman by the name of Barry Bruick. He turned me on towards candlestick trading and stock trading, and it really just kind of opened up a whole new door from there. And obviously you can see that over time I went from a bank working for an investment firm. And even though the bank was a great job, I really got to analyze the financial statements, which is why today I'm really more of a fundamental analyst. there is a certain technical aspect that I've learned from Barry and a few other things. But I think when you put those tools together, it helps bring out the bigger picture. But moving over to Thornburg Investments, that really opened up a whole new global market for me. That's where I got to learn about how these guys are really making their money. And some of these tips and tricks I've kind of adopted for myself because it meets my trading personality, kind of meets my style. And so together, I want to share some of these facts with you guys. I am an affiliate membership of a couple different organizations. So a lot of you guys, you may be a member of the AAII, the American Association of Individual Investors. For any of you newer guys out there, I highly recommend that you join this organization. I've been to quite a few of their chapters, and it is, they usually have some pretty good speakers there. I've always enjoyed my time there, met some great people, and it's a great way to network. I'm also a member of HFMA, so that's going to be the Healthcare Financial Management. So do a little bit of, with the whole healthcare model kind of changing, I didn't know a whole lot about that side of the house. And so for my own personal growth, I've kind of ventured out to learn a little bit about that model because, when you compare the financial model for healthcare to other models, it just didn't seem like, why are we not able to move forward with this whole healthcare idea? What is stopping us on this? But once you learn a little bit more about it, it's a mess, but we're cleaning it up, and a lot of great organizations out there are working together. And then obviously Trading Mentor. Like I said, Trading Mentor is brand new. We're launching this fresh off the ground. So trying to keep our costs low so we can bring you guys the most affordable and hopefully free products that we have. But here below you see a couple of books that I've written that's actually available on Amazon. They are ebooks. They don't have any hard versions. I like doing ebooks because they're quick. I'm able to put my thoughts down and take my time with basically trying to publish these versus doing a hard copy where I have to work with the publisher and be stuck with timelines. I like to let ideas kind of ferment and really just kind of, boil and meld and just let them roll off. But I do have two out there, so check them out. Stock Picking 101. So if you guys really are interested in kind of my thought process of when I'm trading, it is on Amazon for it's either 99 cents or less than $1.20. So if you don't enjoy it, then you're only out $1. Probably my most favorite one that I've done is the organizational process improvement. This one here, if you guys run a business or even your own daily trading, I think this will really open your guys' eyes. We've done a lot of process improvements here within the organization, but also with the management institute that I used to work for. And what this really does is it kind of spells out everything from A to Z. Why you think a simple process might just be A, B, and C. When you really kind of break it down, you really see and kind of visualize those steps in between A and B. And so you might break it down thinking it's 3 steps, but then all of a sudden it's like, wow, okay, there's like 60 other steps in between A and B. So that's what really the issue is. But enough about that. Let's go ahead and get started. Oops. So what we want to talk about first is mistake number 1. I cannot stress this enough. Paying high commissions. Now, there are a lot of great sources out there. As far as like who do I trade from, what are some different options that we have, and I'm going to show you guys a couple things right quick. That's from online brokerage firms, which is funny because I didn't even know that these guys were even a brokerage firm. So they must have just started up here recently. But Ally Bank, so you see right here, $4.95 stock trade fee. You also got TD Ameritrade, been around for quite a while. I think there's been pretty consistent with around about $10. And of course, you guys see the little footnote right here, and we'll talk about that here in a second. TradeStation, $8.99. You got First, I haven't even heard of First Trade, $6.95. And then there's quite a few others that I like personally and myself. And we'll talk about that here in just a second. But why is that such key? Well, because paying high commission is going to eat your profit. I mean, it's as simple as that. But what is a commission? For you vets out there, you guys know what that is. But for a lot of you newer guys, it's basically going to be the cost that it takes to trade. So cost per stock trade is how I like to look at it. Now, these costs, these expenses, they can either be fixed priced or they're price per share. And so typically when I first started trading, I traded with Scottrade. They're not a sponsor or anything of this. But I think they were charging, I think it was like $7.95 for every trade. And so it didn't matter if I bought 20 shares or 100 shares. Each individual trade when I purchased was going to be $7.95. And then if I sold it, $7.95. And for example, if I had 20 shares and I sold 10, that's $7.95 times 2. And then If I sold the other amount later, $7.95 again. So that's how these guys make their money. They're not stupid, they're not dumb. They gotta make their money somehow, and that's how they do it. So that's why I put on here that it can range from about $4 to $12 per purchase. And so, and it's not just per purchase, it's also for selling. So just kind of break this down, give you guys a little bit of visual. Is NLE Capital, so NLY. So as of the close of Wednesday, they were trading at $12.31 per share. So if you're buying 20 shares, you would think that total cost is going to be $246.20. Okay, well, if you sit there and add $10 commission fee, because that's maybe what your brokerage firm is charging, well, now your total cost has increased from $246 to $256.20. Okay, well, when you break that down, divide that by 20 shares, what am I looking at? Well, quite surprisingly, versus $12.31, it has now shot up to $12.81. And what that is basically going to be is your break-even price. Now, this isn't your true break-even price because you still got to sell it. And of course, brokerage firms, they're going to get their money's worth. And so they're going to charge, yes, another fee to sell it. So in our little scenario right here, $10. So $266.20 is what they're charging, which what I like about this, it really shows like your new break even for your cost per share, $13.31. So that means out of those two $10 charges, your stock now has to move up $1 per share. Outrageous, isn't it? And so that's why I want to put mistake number one is because when you're sitting there trading these stocks, you guys don't really, not you guys, but a lot of newer traders and investors, they don't really pay attention to that. So we're going to kind of highlight that here. Here we have NLY once again. So for a lot of you newer guys, these are candlestick charts. So just kind of ignore the color, but kind of look at the pattern that you see right here. So what we've got here is it traded at $12.32. So if I'm going in, I'm going to buy, let's just say 100 shares. So I'm buying at $123.20 because I'm purchasing 100 shares. Well, they're going to charge a commission for that. So let's say $10. So here, basically what this is okay, now my stock's got to move up this much for my break even. All right, well, and it's making a little bit of profit. It's time for the sell. Well, I can't sell right here because they're going to charge an additional fee. So now my break even price is now pushed up here to the red line. So that means basically everything underneath this red line where the stock moves is going to be a loss. That is what we want to avoid. I like to call this red line to break even because in order to get a profit, you have to move up above this. Now what's cool about having lower fees and lower commissions, this stock right here, it doesn't have to move as much. So one of the things that I like to use is Robinhood. It's a free trading platform, something I can do directly off my mobile. In fact, we're going to do a webinar here in the future on trading on mobile platforms because it's very fast, very unique, and I like it. As long as you do your homework and know what you're purchasing, it's a great way to kind of monitor certain stocks, and this happens to be one of them that I do monitor. So a little bit of technical analysis and fundamental analysis that I like to do. And so basically anything below this line, below this red line is going to be your loss, and so that's what you have to avoid. So in order to minimize that, you want to make sure those fees are down or as low as possible. And so like I said, I trade with Robinhood. They charge 0 fees. Can you believe that? 0 fees. It means they don't charge when you buy, when you sell. So if I want to go in here and I want to buy, say, 1 share, they're not going to charge me a dime. I'll be basically purchasing $12.32. So what's cool about that? Well, it moves up 1 penny to $12.33. I sell it that same day. I just made a penny profit. It goes up maybe 50 cents. That's 50-cent profit. And so my red line up here, my break even, it's not up here anymore. It's actually right here where this purchase line is. And so that's just something to consider. And no, they're not a sponsor of this program, but there may be a few others. Robinhood is the only one that I know of. But if any of you guys out there know of some additional brokerage firms that are pretty good and they charge 0 fees, let us know. Shoot that over to us. I'd like to take a look at that. Now, when you're sitting there, you're looking at your commissions and trying to get the low possible commission fee as is out there. Next thing that you have to do is you have to establish a buy point. Now, establishing a buy point is highly crucial. I wouldn't say most important, but it is definitely crucial. And the reason why we do this here on this side of the house is it removes the emotions. I like to use the old Vegas scenario. You're at the slot machines, things are going well, you just want to keep letting it ride. Why? Because greed sets in. When you let greed set in, then, well, you tend to sit there and throw a little bit more money at it, taking a little bit more risk, and, house always wins, right? That's what happens in Vegas. But another thing is, it forces you to do your research. So when you're looking at these stocks, like, say, FinViz, obviously I'm not just looking at the charts, but I'm looking to see where it's been trading at historically. And so it's going to give me an idea of where I need to purchase. So if mentally I know where I want to buy that stock at, and I'm monitoring that, I might go ahead and put a buy order in. So if it does hit at that, say, $12 that day, it's automatically in the system. It might go ahead and purchase that 100 shares for me. It takes that emotion and impulse, because if I'm sitting there buying, if I got targeted in at $12 and say that stock opens up right here, it shoots down to $12.15 and goes up to $12.50, your natural human tendency is, oh my goodness, the stock is going up. I need to hurry up and jump in. Well, 9 times out of 10, what typically happens? Well, about the first 20 minutes of the market is going to kind of go up and down until it finds its gradual momentum. And so if I jump in right away at $12.50 because I got that impulse buy and it starts going down, I just missed out on an opportunity to get it at a cheaper price. Another great thing, which for me personally, it boosts my confidence, and it's going to boost your confidence because you've done your research. You're not buying on emotion or impulse, but basically you have a buy point and you're feeling good and comfortable about that. It sets a target and you're basically able to just kind of walk away from it. I cannot stress enough, if you guys take anything away out of this webinar, is mistake number 3, is you must, wouldn't you agree? Yeah, have a sell target. Okay, why is that? Well, you went in there, and just like with the buy target, it removes the emotions, it removes the greed. You see your stock going up, like say in our scenario of NLY, if it's at 1232 and I purchased and I see it jump up to 1280, my natural tendency is, oh, this baby's moving, let's stay, let's throw some more money at it, let's see if it can ride higher. But if I already hit my 7% gain, then take it off. Go ahead and remove that profit. It really depends on your own trading discipline. Some people like to do that. For me personally, I lose money every time I do that. Every time I try to stick with it and stay in. And so what I've learned, actually I learned this from the investment firm that I used to work for, is whenever you establish your buy target, you go in and you set that sell target. It removes all the emotions out of it. It establishes that discipline. Okay, and it does minimize your loss. Because if I go in, say I'm buying a stock at $10, and I say, okay, when it hits that 10% mark, it automatically sells. So when it jumps up to, say, to $11, I already have the order in there. I already have the sell, the market sell programmed in. So when it hits that $11, it automatically sells. Okay, it takes a lot of that guesswork out, and it takes a lot of that away from me so that I don't let my impulses, let my emotions take over. And I'm telling you guys, it minimizes your losses. Now, don't be those guys where you set a buy point and then you forget to sit there and establish a sell point. Okay, that happens a lot. It's so easy for us to go in there to buy a stock that we oftentimes forget how to sell a stock. So before you even purchase a stock, you go in there, you write that number down on a piece of paper. Okay, I'm buying the stock at this. Now, where do I want to sell this stock at? Maybe it's 5% above where you purchased. Maybe it's 6%, 7%, 8%, whatever that is. Go ahead and write that down. And when you purchase it, go ahead and set that order to sell for a good until canceled. Okay? I'm telling you guys, I cannot stress that enough. All right, so what we talked about today is top 3 mistakes. Now, this wasn't one of those webinars where we would just want to kind of go on for hours and hours and hours saying, oh, okay, well, this is a mistake I made. This is a mistake I made. These are the top 3. These are the top 3 that we have learned. And trust me, it has saved us a lot of money. Okay, when you're sitting there trading, there's a lot of things going through your head. You got multiple screens popping up, trying to do what you got to do. But I'm telling you guys. And so mistake number 1, look for certain asset or certain brokerages out there that charges very low fees. Mine, I have my favorite, and I've already mentioned that a few minutes ago. You guys might have one through, say, your own personal brokerage. Those are just things to consider. Obviously, the more shares you buy, the lower that percentage per stock is going to be. But for a lot of you newer traders, if you don't have that kind of cash, it could quickly eat your profits, which means that your stock has moved that much more. Number 2, you got to establish that buy target, okay? We've already kind of harped on this and beat this to death, but I cannot stress that enough. And then obviously the most important thing is to establish that sell target. Okay, when you're sitting here buying your stocks, you gotta have that sell target, and it's gonna save you a lot of money and save you a lot of risks. All right, so if you guys have any questions for us, and maybe some things that we could do better on this side of the house, and then maybe it's something that you guys have learned over through your own experience, shoot us an email. We're at tradingmentor2015@gmail.com. We do read those, and we like to share those. We're going to start posting some of these videos on YouTube just so it's available to you guys at any moment. But also visit our website. We're hoping to go with the full domain here in the very near future. We still want to set up a whole new system, and so really what we're doing is just kind of testing the market, see if there really is a market out for this, because we want to work together, we want to trade together, and then hopefully eventually, obviously once we get this community established, why not set our online brokerage firm? We're able to sit there and trade back and forth. So a lot of great things kind of going on, a lot of great ideas, but together we can all do it. So I want to thank you guys so much for joining us here in this webinar.